Right, thank you everybody for coming. This is our Tuesday night Agent 101. So as we're continuing our process, tonight is lending night, and Kevin's just one of the best. He's got a great team. He's got a lot of experience, and it's kind of funny. The more we're in the business, the more we're realizing that we're really just guides and teachers throughout the entire thing. And so that's what he's here tonight to guide us through the lending process.
So I'm going to go through basically a very granular process. It's going to be probably too granular, truthfully, but I think it's super powerful to see everything a lender has to do on both sides of the coin. Before I get started, so tell me a little bit about you guys, so I know your kind of background and what you guys are looking to do.
I'm just starting. I just barely finished a real estate school in December of 2018, so awesome. Just starting into the market. So
new agents are some of my favorite for two reasons. One, it's a blank slate, right? Yep. I can mold you into any lending little thing that I want. And then second is I've noticed, through my careers, if I get the agents early, I build a sense of loyalty for them long term, right? Because Kevin was there for me when I was asking all the little silly questions like how do I write a VA contract and that kind of stuff. So it's actually the lifeblood of the business, I think, to a degree. So, but yeah, that's cool. Congrats.
And Lizette, and what is your name?
Erasmo.
Oh,
So that'll be hard to remember, but same situation, just got my license, and
Good for you.
one of my co-workers told me about the class, was, getting some credits.
Yeah, absolutely.
Learning
Some good knowledge, for sure.
Yeah, cool.
So this is, for you guys, this is going to be kind of like drinking from a fire hose, but it's actually really good for you to see the inner workings of kind of how everything starts. This here is a workshop that I put together for some of the larger teams that I work with. Anything you see in red is basically your piece to pay very close attention to. And I'll coach you guys on those pieces. The stuff in yellow is stuff that I have to deal with and handle. That's really important to the general theme and timeline of the transaction. So basically you get an accepted contract. We'll start from there, from the lending side of things. Our contract basically comes in, and you'll see the second our contract comes into our system, it goes into a grant team inbox. And I have an assistant who instantly works up the loan status update, which you guys have probably seen in school. That loan status update, my vision is it goes in, basically gets sent out within two to 4 hours. And we've worked diligently on that, and the reason why is because I feel if I've already spoke to the listing agent and introduced myself while the contract was pending, right? I have a really good rapport with them already. Now when they see an LSU come in within hours, they're like, okay, this guy really has his stuff together, right? And it sets the pace on the transaction. Believe it or not, it also gives us, say Josh and I have a contract, it gives us some wiggle room. And the reason why it gives us wiggle room is, say we need bins or repairs, we need this, we need that, the other thing. They have a really good feeling that the transaction's spotless, and I don't want to walk away and put the home back on the market, right? I'm dealing with a rock-solid client and a rock-solid lender. I don't want to walk away. So we get these disclosures in. Once the LSU comes in, we send that out. Loan is set to initial disclosures. Basically what we do is we take everything off the contract, we stick it in the system, and we put taxes, insurance in there. We ballpark pretty much everything. The tough part for us here is the way I structure my business is I put worst case scenario numbers in our first set of disclosures. And let me tell you, that took a lot of coaching. Because what happened in the very beginning of my career is I would do estimates for everything, and then the client would look at the number and get overwhelmed, and then they would go calling other lenders, right? Yeah. And then of course they're going to get a sharper number because any lender looks at it and says, oh, I can beat these, right? Because I'm giving them worst case. And then next thing you know, I'm losing deals because of that. So now, through coaching and some other things, basically the conversation I have with the client is I coach them to basically say, when you see the initial disclosures come out, just remember, those are estimates only. And again, it's just a ballpark. The reason why we make those high is because I've never had a client upset that the number came down in contrapositive. I've had some pretty upset when the number went up by even $50, right? So I tell them, this is your absolute worst case scenario number. Now, in this scenario, say you have a first-time home buyer that's extremely tight on funds, we will tighten the numbers up a little bit more than normal. So from a lender side of things, you have to understand, if we disclose a certain dollar amount and then we're off, we pick up that bill.
Yeah.
So what percent does it have to come within?
There's a tolerance, like a 1% tolerance.
1%?
Yeah.
Wow, okay.
So it gets real tricky. Like for instance,
Yeah.
I had one in Sun City Grand that had a rec fee on it.
Oh,
Blew the tolerance out of the water, right?
yeah.
So we didn't disclose the rec fee, and we actually, my branch had to pick up a $3,000 rec fee that
Yeah, because what that almost do, double almost? Yeah.
creamed it,
Yeah.
like instantly. So,
That was an impact fee, not the yearly.
correct,
Yeah.
correct. So, and again, it's a slippery slope, right? That's where you really have to pay attention. And we always, and if you go, like if you actually looked up my Zillow reviews, you would see every single client, it says fees less than expected, interest rate less than expected. Because we structure every one of our deals worst case scenario. And typically clients, when I have the coaching call with them, I instruct them to say, look, it's like somebody coming into your home and giving you an estimate on cabinets, right? If they tell you $450 and then when they go to finish the job and they hand you an invoice for $650, you instantly feel like you were taken advantage of, right? So I figure if I give you worst case scenario numbers and then I come in lower, that tells you I did everything I could to get that number as low as possible for you. So that's pretty much how I coach them. At this time, typically we lock the client in. Basically what a rate lock is we give them anywhere from 15, 30, 45, 60, 90 days rate locks, okay? And the reason why we lock rates is because we have this thing called a warehouse line, okay? So we have this, just pretend there's an invisible large warehouse somewhere just with tons of money in it. Basically what we do is we tap into that warehouse line and we say, okay, we're reserving $240,000, we're reserving $450,000. And when you reserve those funds, you reserve them for X amount of days. And that's what that lock is. Out of all the disclosures that both parties have to fill out, there's actually no disclosure for the rate lock, which is really interesting.
Interesting.
Yeah.
So like right now, are you having, because forgive me, for the last couple of weeks I've been kind of not necessarily on pulse. I know there's been activity,
Yeah.
but hasn't it been going down?
Yeah, so this is the thing,
So-
rates are really tricky, right? So I'll
Yeah.
give you a quick synopsis of rates. Say a customer qualifies for 4%, okay, not charging them anything to get the rate, just a flat 4%, okay? When rates get worse, like say there's a sell-off in the market or whatever the scenario is, when rates, what we call deteriorate in our industry, right? Rates will go from the client still gets 4%, but now that 4% costs him $1,200 to get that 4%,
Okay.
right? And then all of a sudden we have another deterioration later on in the week. Now that 4% costs him $2,400. Okay? Now, all of a sudden there'll be a quick 2-day run on rates. Now it goes back down to 4% only costs him $400. Okay? So typically rates slowly climb, especially in our economy. You'll never see rates go from 4 to 6. It doesn't work that way. It's a slow climb in cost, right? So then it gets to a point where say the rate goes 4% for $3,400. Now you're no longer looking at 4% because nobody's going to pay $3,400 for 4%. Now you're going to jump to 4.25%, which now only costs $800.
Are we calling that the buy down?
Correct. And that buy down fluctuates based on the market rate for the day. So the tricky part is you'll see a great improvement for a week, and then we'll have one bad day, and I'll look on Facebook and I'll see 10 agents talking about rates are lower than they've ever been, and I'm like, I have no idea what you're talking about.
But the lock is not overridden by that, is it?
No, so this is the great part about lock. So he was talking about rates in general, but once you lock in the interest rate, you're locked for good. The only way that actually goes down is there's very few handful of companies that allow this, and we do. If your rate improves by 1/8 or more on the current stock market, we get an automatic email that says the rate has improved by 1/8 or more, and I'm allowed to lower you 1/8 with no fee.
So you can put a smile on the buyer's face.
100%.
So right now, if you lock and it goes down as
1/8.
okay,
Yep, I have a small window, and typically Barry Habib, so
Yes.
this is a really cool thing about Barry Habib. I'm set up, I pay $600 a year to get automatic text messages from him telling me when rates are going to do what they're going to do. And if rates are about to jump, I get a pre-recorded voicemail from him saying, hey, rates are about to go up, you have 30 minutes to lock. So it's a really good service for me and my clients because I know I'm getting the sharpest price on the market. Nobody's beating me, right? Nobody will beat me because I get in that window usually.
yeah,
And a lot of times it sounds like, I usually hit my assistant up, Aaron, and I'm like, lock the loan. And he's like, did you get their authorization? Lock the loan. I'll take care of it, right? And then usually I call the client and go, guess what? Just saved you $932. Because I couldn't get a hold of you. I called you on lunch. I sent you a text, call me ASAP immediately. And then I get them on the phone and I'm like, bad news, rates went up. And they're like, sorry I couldn't get back to you. I'm like, but I locked you in without your authorization because it just saved you $900. And they're always like, thank you. You know. So typically what we do is, just to give you an idea on that, is that's the swing we see. So when you see rates go up, it's such a finicky monster. Typically where people don't understand is rates usually increase over time. You'll never see a big swing in interest rates like quickly because it will disturb our markets drastically. It actually disturbs the overseas markets more than it disturbs our markets. So that's why it's a slow, gradual increase. At one point during the summer, we had 13 consecutive weeks this past summer of rates going up.
It's crazy.
And you're just sitting there watching it go.
Were you in the business in the 80s?
Well, obviously,
He
I was
wasn't
born in
born.
'83, so hopefully not. I know my mom laughs, so funny story, my mom, the first house she
We were
purchased.
dealing with 16%
I know.
interest.
My mom, I joke, like my mom's, I had this conversation with her the other day, she goes, you sound like you had a rough day. I'm like, yeah, it's been a long day, you know. I'm like, you know, clients and interest rates, and she laughed, she goes, son, she goes, our first home was at 17. She goes, you can sell 4.5.
Yeah.
Right? I'm like, all right, I got you. Thank you. Thank you for the uplift. But yes, so,
I got a 12 and I was elated.
yeah.
Yeah, our house on Grover's was at 11.
Really?
Yeah.
Wow.
So the 30-year average, does anybody know the 30-year
What was our
average?
11? I would like to know that.
I don't know, that would have been interesting.
Yeah, because that was what, like 84? Something like that.
Yeah, I came here in 81 and I was in the market. Oh, it was terrible.
Yeah. So the 30-year average is 8.25.
Okay.
Yeah, the 30-year rolling average. So when I talk to clients and they're like, oh my God, 4.5, oh. I'm like, all right, so here's some perspective.
Just you wait.
Right? It's like that Band-Aid, right? You've seen 3% on TV for the past 10 years. So a lot of clients focus on what they've seen for the past 10 years because it's been beat in their head watching the Quicken commercials, right? Now it's a matter of education, right? We go, look, rates aren't as great as they were, right? It's like
But
gaining
they're
10 pounds
better
opposed to
than-
losing 10 pounds.
Yeah.
But it is much better than the historical.
And they're always quoting like the 10 years. They never quote a 30-year on TV either. It's always the 10 or 15 year. That's
But
going to be
when
your
we were
lowest.
dealing
Yeah.
back then, we were looking at an average price of $85,000.
Yep, so you could do a 15-year and you could afford it easily.
You know, so,
Yep.
but even the rate, you know, but if you were charging those rates on the $300,000 home now,
Nobody could afford it.
nobody could afford it.
Yep, 100%.
Interesting.
So the other piece is, so you'll see here, typically our loan officer assistant reaches out, goes over the initial disclosures with them, lets them know, hey, these are just estimates. We go through that whole thing. I have a gentleman on my team that's been with me for 10 years that basically takes over the transaction at this piece. Once disclosures are signed, usually DocuSign, they go right to their inbox, they sign, they're triggered,
Yeah.
then we can legally order the appraisal.
Really?
Anytime you order the appraisal outside of disclosures being signed, you're ordering it truthfully and lawfully. Do I know some lenders that have done it? I absolutely do. Am I one of those lenders? I am not. I'm one of those guys that I do things by the book, especially in lending, because it's my license and I have a family and kids. It's important to be able to support them. So my whole theory is coach the clients better and the product will be better. So a lot of times it's just a matter of letting them know, hey, you know, disclosures are in your inbox. And they get reminders. They send them automatic reminders to them. So once they sign the disclosures here, you see the red. Once you get an email from my team that says, please let us know when we have the green light to order the appraisal. That means the ball's in your court. We're waiting on a clean inspection,
Okay.
right?
Yep.
So a great example today was we had one that had 2 repair items on the Binzer, very small, minor stuff. And the agent emailed us and said, hey, we're good to go. Like, these are really small. Both agents have agreed verbally we'll be fine. So we ordered the appraisal. And we typically send them a link directly to their inbox, and they fill out their credit card information on their own, and then send it in. And then we order the appraisal.
So do you have a pre-selected group of appraisers that is,
Great question.
uh,
So yes, so we have what you call, we have an appraisal panel. That's another one of the reasons why I'm with the company I'm with. So this is the deal. Legally, you cannot pick appraisers, okay? But if you have a panel of appraisers, you can choose between the panel of appraisers that you have. So it goes into a bucket, but I have 6 appraisers that I rotate through. And I will say they know that I'm extremely picky. That's the best way of putting it. I got one guy booted and they were all like best friends, and the guy got booted and then a couple of them were upset with me, and then, you know, they quickly learned that like I'm just not the guy that's
Don't play games.
I caught him doing something he shouldn't have been doing, and he used a comp that wasn't accurate. He used a short sale comp, right? I'm like, this is a no-brainer, and he shorted us by 10 grand. And then
For crown sakes.
and then he argued with me about it, like, and I said, like,
That killed the deal.
it did. Actually, luckily, my company allowed me to order a second appraisal, and they said, you know, as long as the second appraiser didn't use the short sale, nobody's going to use the short sale comp, right? Like, it's a no-brainer. And it came in actually 5 grand over.
Good.
Cost me $500 out of pocket, but I saved the deal. The agent thinks I'm a hero, blah, 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 blah. And we got that appraiser booted off the panel.
Does your company actually do the funding?
We do web funding, so we fund everything. We don't
sell off the loan?
Correct. So the one thing that's a little bit different about our company is we have what we call a company liaison. So anytime, for instance, Josh and I close, or like Rebecca and I, you know, we close a loan, I'm your point of contact on your mortgage forever. So if you ever called me and said, hey Kev, like Round Point's my servicer.
So even if you sell it, it's still gonna be serviced by you? Or?
Correct. So you contact me and we have a liaison that I send the information to, and I say, hey, we need updated information from Round Point about this client. And that's a really big retention piece for me, right?
Yeah.
Because anytime a client feels like they can call me and I can get them an answer on their mortgage payment, right?
That's
So-
like one of the worst. Like before they even make the first payment, they're already
It gets
finding out
stressed.
who. Yeah.
So the cool thing, and I'm not supposed to say this in certain platforms, we are part owners of both of our servicers. So that's why we have a liaison that connects with them.
Okay.
So we don't have to actually.
That's a good thing.
Yeah, but we're actually not supposed to disclose that we're part owners of the servicer. But you know, this is a small room. So.
I'd hate to be paying my loan in China.
Yeah, I mean we're
Especially when you're talking.
now it's a great selling point, right? Because we have a local office, right, where people can walk into. And then the cool thing is, like, I had one recently, older gentleman, Anthony Torres was his name, retired military. He had 2 payments actually get pulled out of his account. So he came in, sat down, we brought the bank statement, and we called the liaison, and then they got Round Point on the phone, and they reversed one of the payments all through, you know, it took like 25 minutes, right?
Yeah.
But that's the cool, powerful piece for me, is I have a lot higher client retention because of that.
Yeah, because you're staying in the loop.
Yes, I'm always and ideally, truth be told, I want to be in contact, right? Because anytime they need me, and trust me when I tell you, every year when the tax bill comes out, it's the most annoying time of the year for me, because my phone just explodes. You said my payment wasn't going up. No, your payment's fixed, but your taxes just went up by $13. I can't control that one, right? So it's good and bad, right?
Yeah.
So next, loan officer assistant, the disclosures are in, right? That's when we request all updated pay stubs, bank statements, anything of granular nature that needs to be updated. Typically, we always have up front, I do a little bit more homework than most loan officers because I hate when a deal falls out. So I request more documents up front, and there's a handful of agents that would tell you they don't like that piece of my business, but they thank me every time when.
Yeah, because when you have your close of escrow, you know, delayed.
Because of that, yeah.
Yeah.
So my thing is eliminate the variables up front. Takes a little bit more time, but and then I tell the agents, like coach the agents, hey, just let them know I'm going to be asking for quite a bit of documentation up front. And the reason is then I can eliminate variables and I never have to worry about you spending a ton of time showing homes that they're never going to qualify.
Well, don't you have it on the back of your card?
Yes, yes,
So
the
that's
list of
everything
documents.
yeah,
Yep.
so.
And it's funny, it's not that difficult, but what happens, where I get up against is I'll get up against some really seasoned agents that, you know, do a ton of business, and they'll look at me and go, well, you know, my other loan officer, you know, he'll do blah, 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 and I've only had a couple issues. Well, that's a couple issues more than I want on my name, right? That's just, my vision is once your name is on the prequal, it's only Kevin's fault when it falls out, right? They don't care, truth be told. So once all data, go ahead.
In a fourplex,
Yep.
income to debt ratio. The guy works, but he's still buying a fourplex and he's gonna live in one.
Okay.
Does the income from the other 3 units get noticed?
Yeah, so what they do is they basically take, you have to have, in those scenarios, you'd have to have 15% down, right? But in that scenario, you would basically take what they call, it's a 107D. And an appraiser goes out and he'll tell you that property right there, based on the market and all the other homes renting around it, is worth $1,100 a month. So they credit him $1,100 a month. They credit him $1,100 a month and then $1,100 a month. Then they take that total number and they give him 70% of that total.
What's the percentage?
Correct, it's 70%.
Even if they're not leased up at the time?
Yes, they'll give them, it's called future income, right?
Yeah.
It's something that lenders are trying to get in front of now because of the whole Airbnb and you know, different types of rental things that are happening now. Now the tricky,
Okay, so they're not even looking for a long-term rental,
yeah, they're going off that base amount because they know a lot of these people are buying these for that reason.
okay.
It's extremely difficult. Like you have to have a good credit score to do all that, right? Because you're not doing this on a 620 FICO, right? It's usually 700 or higher. But they do allow you to use that future income. The tricky part is, and it's a moving, like as a lender, you could do everything perfect on one of these. I had one just recently, which I'm still banging my head against the wall. Client needed exactly $1,700 for a condo in Scottsdale. Okay, so I had one of my appraiser friends run that rental scenario for me, and he said, "You're at $1,850 easy." Well, the appraiser came back, and he came back at $1,625. So now I'm $75 short, and I did everything like from a loan officer standpoint. You know, and this is the tough part about our industry. I can be perfect. Like I literally ran the rental analysis.
Oh, wow.
You know, I had an appraiser do me a favor, ran the rental analysis. Felt really good. I even had a little bit of a cushion. And it came back lower than I expected. So, and I have zero control over that, right? And if an appraiser says, here are my 3 comps, and the comps are sound, which they were, he just chose a couple lower comps. And so basically I had to call the client and say, we can still get this done, but you have to bring in $11,000 more to cover up that extra, you know, basically $75 a month.
Wow.
And he was absolutely livid, like, you know, you're baiting and switching, and I said, no, remember when we had the conversation that the rental, you know, we call it rent schedule, the rent schedule needs to come in at this, and he's like, yeah, and then I pulled up the email, and I read the email that I wrote to him, and he's like, yeah, but it just feels, and I'm like, I know it feels, but I coached you on this, I told you this was going to happen, and now,
besides, it was a guesstimate.
yes,
too,
and that's
so
what,
it's like-
and again, that's why I put everything in writing.
Official until they say it is.
Yeah, that's why I put everything in writing, right? And if there's anything you guys can take away from some of this stuff, put it all in writing, because it saves your tail. The good part about that is he rented the place out first 3 weeks in a row in Scottsdale, sent me a text, and he's like, I rented it out for $4,200 for the first week, and then he got like $3,000 and then $1,100. And he texted me and he said, you were so right, because I told him, listen man, if you're going to be an investor, you're taking $11,000 out of your 401k, you're going to get that back so fast. This is going to be insanely fast. And he was like, yeah, but it doesn't feel like, listen to me, if you're a true investor, you'll understand how this stuff works, right? Now he's calling me wanting to buy another property, which is, again, he saw the value after we closed and realized, you know, it wasn't me, it's the way it works.
So once they establish themselves, using one of the units as their quarters, the next one is easier?
Yeah, easier. That's a good.
Wouldn't that depend on, I mean, because it depends on where it's at and what the history and. It
Yeah,
seems to
there's
me
so many moving
You
pieces,
have
right?
similarities, but every property has
And you
its
can only live in one
own
of them.
unique.
Yeah.
Yeah.
Yeah, so the
You
tricky
know.
part is it's every property so different, right? HOAs, homeowners
Yeah.
insurance, all that kind of stuff. But a lot of people don't qualify for the fourplex because they don't have the reserves. Because you always need, on 4 units, you always need 12 months reserves.
12 months.
Yeah. 6 months reserves on a single, 12 months reserves on anything north of 2 units. So, it's a little trickier beast. Then the loan goes into setup stage. This setup stage, we have an assistant that does all this. Now this is the crazy stuff that a lot of real estate agents don't know, and this is probably the sheet I've heard the most feedback on. While we got the disclosure signed and the appraisals ordered, our assistant orders case numbers for FHA, amendatory clauses which go out to the agents to sign, title request from the escrow officer, updated fees from the escrow officer, the prelim, the plat, the EMT, CPL, wire, taxes, fees, payoffs, right? They got to communicate all that with the title company. This right here is a job in itself.
Oh, I bet.
Like it is absolutely, and this is the crazy part, none of this stuff on this list, you cannot send the deal to underwriting without this. So if you don't have an assistant that's on their game, right, you will have an issue here.
Okay.
So a bigger piece when
That
I
makes sense.
tell real estate agents this is, if you had to guess what it costs to fund one loan, what would you, now that you're starting to see all this stuff? $8,200 it costs to fund one loan. So it's an insane amount of money because you have to pay so many humans with all the regulation that we have to do this stuff at an extremely high level. And that's the national average, it's 8,200. I would say that it's slightly north of that on my team because I'm a big believer in paying the right people to do the right jobs. That way I don't miss. Because if you miss, you might not get another opportunity. But we order verification of employment. These things are really tricky. So, fun story. You have a client that qualifies, right? You send him to me, he's had 3 jobs in the past 2 years, okay? I look at his income currently, he completely qualifies, everything's good to go, right? This is where it gets sticky. I've even had them where they've had 6 or 9 employers, right? We have to get verification of employment on every one of those past clients. Every single one of the jobs they worked at for the last 2 years, we have to get a verification of employment. So you have a company that went out of business, you have a company, so you can't get a hold of them, right?
Yeah.
You have companies that, oh, well, he quit mid-job. Yeah, I'll get that to you when I'm ready, right? And then you get, there's no legality behind how fast they have to get these, right? They just have to get them to us. So a lot of times we get stuck in this window right here, right? Where we're asking for verification from employment for companies that don't really want to help us out and don't really have to, per se. Because there's no, again, legality behind them doing it. And this is where it gets tricky. And this is where you have to have, I call the girl on my team a pit bull, because she said, literally I've heard this conversation, she'll say, so we have 2 ways of doing this. I can continue to call every single hour, and you can get annoyed, or you can just get it to me in an hour, and we'll call it good. Right? And then there's always this awkward pause, and then they give her some shit, and then she always calls back and says, here I am again. I'll literally walk past her cube, and she's like, it's me! I'll be back again! Right? But truth be told, she's worth every penny. And she literally knows the game, right? Because we've done enough loans where you know the employers now that you gotta kind of hound and pay attention to and that kind of stuff. So this stuff is really important. This setup stage is something you guys never see. You guys don't even know this is happening, right? We're ordering tax validations from the IRS.
You're sitting on your butt waiting for us to
Yeah.
finish inspections.
Yeah.
Does it start as soon as you get the contract?
Yes, so this is the crazy part, right? We have to get those disclosures out before we can do any of these, right? Because those disclosures authorize us to order validations on employment and all that kind of stuff. So if you have a client, right, that is super slow about getting his disclosures back and decides he wants to wait 5 days, right, then you delay all this stuff, which delays the entire thing. So if you've ever had a delayed close of escrow and your loan officer is stumbling on himself and he can't explain why or what it looks like, a lot of times it may be out of his control, or he may not per se have the team that, knows how to get things done. So on my team, the rule of thumb is anything past 48 hours, get me involved. After 48 hours, I can tell you right now, my assistant Alicia hates calling me. She thinks it's the death of her. Because when she has to call me and tell me she can't get it, she feels like she failed, right? Yeah. And fundamentally, I make her feel that way. Truth be told.
Oh boy.
All the time. I'm like, oh, another one you can't get? You give me a call? Right? And we have a really good relationship, so she always laughs and she's like, I'm gonna 3-way you in on this one, So she'll call me and 3-way me in, I'll be out and about or on a consultation or something, but she always gets me involved. And a lot of times there's a saying in the business, good loan officers, there's a difference, excuse my language, of being a hard ass or an asshole.
Yeah.
I'm a hard ass, because you guys rely on me to be that way, right? Your clients are gonna rely on me to be that way. Nobody knows that I have to be this way until we miss a close of escrow, which we don't.
3 days before closing, we want you to make sure that those funds are available.
That's exactly it. So I'll tell you one cool thing. We just finished our numbers for this past year. We did our entire team did 167 transactions for just over 35 million. And this is my favorite part. Not necessarily that number I can't control. We got docs to title 3.8 days early on purchases.
Nice.
No kidding.
So to me, that's how I know I'm paying the right humans.
That's closing on time usually.
Yes. If it doesn't close on time at that point, somebody else did something they weren't supposed to be doing.
Wow,
Yeah.
that's unheard of.
Key part is pulling out the refis though. So refis, if I threw refis in there, it's 2.4, because refis don't nearly have the level of interest and hurrying through the transaction that a purchase does. So our goal this year's goal was to get that number to 5 days.
Title company likes you.
Yeah. Actually, believe it or not, that's where I get a lot of my business from, because title companies, when they hear 3 or 4 days early, they see docs come over. like we just got one last week 7 days early. And Amy Crossland was the agent, and she called and she's like, I'm gonna sound really like rookie status when I ask this, but what do I do for the next 7 days? I'm like, look at your calendar and wait for the check. She started laughing. She's like, is there like anything I need to sign, or like do we have to do any disclosure?
An addendum for early?
Yeah. And I joked and I said, and truth be told, I apply pressure in certain scenarios, right? That, and we had another one we did 8 days early last month. And the whole idea was, it was a very large team that does over 100 transactions a year, and it was our first deal with them. So I emailed my team and I said, this is it, guys. Here's
You want that business.
here's our chance. Like, it's, you know, put on the show. This is it. And then toward the end, we were like 10 days early, right? And I wanted them out 10 days early. I was being like, Kevin, 10 days, 10 days, 10 days. And our funder, our head of funding, she sends me an email. She said, what are you doing? This is 10 days early. Why are you badgering people to get documents out? I said, and I sent her the screenshot of the Realtor's production. And I said, this is it. And she's like, oh my God, they'll be out by the end of the day. But yeah, it's, so long story short, this stuff is, there's a lot of stuff that happens behind the scenes. So as real estate agents, I always joke, instead of sitting in your underwear and doing DocuSign, this is your opportunity to follow up and just touch them throughout the transaction. Hey, you got your disclosure signed. Hey, how's everything going? How's your interaction with Kevin? Like, how do you feel things are going, right?
Yeah.
Because you will notice when all arrows are pointed toward the client, it tends to navigate itself much better. When, you know, I'm working with another large team right now, and one thing that they've given us feedback on is they feel like they're, after we take over, because we're pretty, like I said, we're not perfect, but we're pretty efficient and we get through the stages quickly, as like I'm explaining. A lot of times the agents feel left out. All of a sudden the appraisal came in and they're like, wait, you know, I didn't even, is it approved? Like, you know what I mean, that kind of thing.
I just want the assurance.
Yeah.
You know?
So like he actually said, my team, so what we did is we set up an auto-generated email now that gets sent to both agents when it's approved, right? So that's their chance to reach out and say, hey, just want to let you know. And that was just me listening to that agent's, you know, feel of his business, and he didn't want to feel like he was disconnected. He's like, we've closed 5 transactions now, and I'm calling to go, hey, the documents are at the title company. He's like, that's like the only time I talk to them after I hand it off. He's like, wow, I really appreciate everything you're doing. I got to tweak this a little bit because I don't feel like I'm engaged. So then we added that email in to just make him feel, you know. So while that's all commenced, simultaneously the borrower is typically getting their updated documents. So our goal is 48 hours. I rush to credit approval, just so you guys know, if you ever get out, and one of the biggest focal points any lender should have is getting credit approval as fast as possible. Josh and I have a deal. We are credit approved, our appraisal's ordered, and Josh is fighting through Binzer things. When a listing agent sees that LSU come over that says we're approved, Josh and I instantly have leverage, right? So I rush to credit approval. I get that puppy credit approved as fast as possible. And our system is designed where, again, as you can see, we move things really fast, and we do that by design. It's because I'm trying to get that credit approval as soon as possible.
Right, this might be like a rookie question
No.
and stuff, but when we look at, you know, that pre-qual form, how much of the process has been started, or is that just, it's just the preliminary?
So you're talking like on the...
How many of the check marks can you believe? There should be a fully checked and fully done, but you'll see that there's different, I'll let you take over.
Okay.
There's different levels of check marks and if they actually did it or not.
Correct.
Well, that's
So-
okay.
So, no,
So the estimate time that you have to complete is 24 to 48 hours for the setup stage form?
correct.
Oh, okay.
So, and if you go to most teams, like I know, I have a buddy that's at another lender, their time is 72 hours. Again, you're at 72 hours there, and say you go to 48 hours or 36 hours in underwriting, right? And this is a really tricky thing about if I could have a lender or a real estate agent come into a lender's world. Our companies don't work on the weekends. Title companies don't work on the weekends. So while those escrow days are just ripping through on the weekends, you know, those 2 free days that, you know, Saturday and Sunday every single week, you know, those days are dead still air for us. So I have to make up that time and be insanely efficient during the week, right? And that's why I'm such a maniac about the process, is because if I'm done early, I don't have to worry, right?
Yeah, you can
Something
relax.
comes up, right? That kind of stuff. But to answer your question, any agent, any lender that gives you a pre-qualification without the boxes checked, it's not worth the paper it's written on.
Okay, that's what I.
Period, point blank, end of story. And if you see no boxes checked, ask, well, so I'm not seeing any boxes checked, did you just run the credit? And if they say yes, the very first thing I tell coach clients all the time is like, I win a lot of deals this way. I'll ask clients, well, I was working with Fairway. Okay, did Fairway collect your docs? No, he just ran the credit approval and, you know, gave me a pre-qualification. I said, okay, so that's not a pre-qualification. So when you write that $3,500 earnest check, you're crossing your fingers, you interpret your financials the same way the lender does. And let me tell you, that doesn't exist, right? Had one the other day, the guy, he actually gave him his overtime pay. He gave the lender his overtime pay. His lender got his hands on the documents. He's only had overtime for like the last 6 months. You need 24-month average of overtime to use it, right? So the guy called me and he's like, so can you say this? Can you say this? And I'm like, well, what happened? And he's like, he didn't collect the pay stubs. He just went off of what the borrower said. He used the overtime. Because, again, borrowers don't know, right? They have no idea. They think they're doing, yeah, I'm feeling good, right? I thought, you know, I gave you my number, and like, and again, as a client, I'm upset with the loan officer because they didn't do their due diligence, right?
Yeah.
And a lot of times you get this whole thing going where my whole theory is, we all get paid a lot of money to do this job at a high level. Stop cutting corners because it will only cost you in the long run. So anyways, to answer your question, I very rarely, it has to be a very special occasion where I've done multiple deals for a client, I already know their financials. It's got to be a very one-off. For instance, I didn't get tax returns the other day on a client because he filled out the application, gave me his pay stubs, and he's 40 hours a week salaried, right? I don't need tax returns because I can just do what we call W-2 transcripts, and I can move along. So you won't see on that scenario, right? And then the listing agent called me and she's like, well, how strong is this pre-qualification? Because I don't see taxes checked. I go, well, we're not doing tax validations. This is a W-2 transcript only. And she's like, oh, okay, thank God, because I thought this was one of those lenders that didn't check the boxes. Nope, but I appreciate the call, right? So she's doing her due diligence.
Well, I had one where the lender didn't know that my client only got paid once a month. And
Didn't collect pay stubs.
yes.
Because it says all over the pay stubs.
Yes.
Twice a month.
And so, as a result, it was interesting because this was one of those pre-qual. It's like, well, how come this and this isn't checked, you know? But it's like, you know, he says, I'm going to get it for you. I'm going to get it for you. It's like, okay.
So what I would recommend in that circumstance, if you ever have that scenario where something comes up where you don't feel good about the lender or you don't feel good about the scenario, just shoot me the pre-qual and I can go over it with you and I can say, hey, look, this is, you know, again, it's a way for me to earn more trust with agents that don't use me, right? And I can show you, hey, this is what he should have done. It's so funny how often I talk to a real estate agent. I talked to one yesterday. She's like, the deal fell out because of this, this, and this. And I said, do you want the 100% truth? And she's like, yeah. I'm like, he didn't do his due diligence up front. Because, for instance, the deal fell out because there was a foreclosure on his credit that the loan officer didn't know about. I said, so it's impossible for it to be on credit when you first pull the credit report because it literally says foreclosure, right? You can't miss it. What the loan officer didn't do is he didn't ask the client for the address. And what we do is we then go to the title report because we have access through a title company to verify exactly when that recorded. What ended up happening was the lender never recorded it onto their name until like a year and a half later. Right?
Wow.
Not their fault, but the lender didn't do their due diligence, right? So the second we see any foreclosure on a credit report, our rule of thumb is it's recent enough to go look it up, right? Like if the fact that it's on a credit report for 7 years, it's recent enough to look it up. So again, slow down, do a little bit more due diligence, right? Contact the client, say, hey, you didn't mention you had a foreclosure, but I see it on here, right? We had one recently that was actually a short sale, not a foreclosure. It was reported wrong on the credit report. But once I pulled the title report, it said short sale. So now I know my timeline was different because we did our due diligence up front. But that was a great example where I told her, I'm like, I'm not going to tattle on your loan officer. I'm just going to let you know that fell out and that you never even should have been showing homes.
Yeah.
Because truth be told, that's a small thing up front.
Yeah. Two quick questions.
Sure.
First thing is, so when you're dealing with like a quicker escrow process, for example, like let's say you're trying to get it closed in 20 days.
Yep.
Okay. How wrong is it if you try to get the appraisal done up front? You know, like because I've never I never knew that. And so I've always, like, more often than not, I ask them to wait just because, you know, like, if they cancel, why, you know, if we have some Vinzer thing, whatever. But sometimes you have other lenders that are trying to, you know, get it going. So I never put two and two together. So is that something that, I'm not trying to throw anybody under the bus, but is that something they know they're doing something messed up on?
Yeah.
Or?
Yeah. A lot of lenders do it though. I'm not gonna lie to you. It's not anything that's really policed in our industry. Like, if you got audited from a state auditor, you're in deep shit.
Okay.
Okay. Like, that's truth be told. State auditor I've seen once in my 10-year career.
Okay.
And he like was in and out in 20 minutes. Like literally, he was looking for business licenses and simple things.
Okay.
My thing is, again, I just like it's almost like letting the genie out of the bottle. You do it a couple times, then your team starts doing it, right? And then the next thing you know, it's just that one time you get nabbed on something you shouldn't have done.
Yeah. So the general rule right now, let's say you have your 10 days, and then is it taking like 3 or 4 days to order it, and then about 7 days? Is it really? Because I know Black Canyon City for a long time they were having an issue getting them done.
Yep.
Holy crap!
Anything in rural areas are usually 2 weeks or north, and I have an office in Payson that I manage.
Okay.
So that is a 2-week window automatically.
Yeah.
So all of our close of escrows up there are 45 days or more.
Okay.
So anything in rural areas, you're going to see a longer close of escrow.
Okay.
And truth be told, we have a pinch right now of appraisers happening. Okay. A lot of reasons for that. The appraisal job itself isn't like one people like are in love with. And now the appraisal board is considering going to having degrees in order to do appraisals.
And apprentice, like mega apprenticeships and stuff like that.
Yes, yes. So there's some really weird stuff happening on the appraisal side of things.
Is that good?
Yes and no. I mean, I think the quality will increase, but
Yes,
you're seeing a lot more, you know.
We might not have enough of them by any means.
That's what we're seeing, right? And again, the one thing that drives me nuts about the industry is I have zero control. Like, I have good appraisers, and I told you I'm kind of a stickler about who's on my panel, but I still have no control, right? If an appraiser says my value of opinion, because that is what an appraisal is, it is a value of opinion, is this, and it's a sound appraisal, that's the number. Like, it's not the lender's fault, right? Like, I have no control over that. All I do is punch the code in, it goes into this bucket of 6, they rotate through, and you know, whoever picks it up first.
Yeah.
So, truth be told, we're all at their mercy, you know? We don't see as many appraisal issues now because values are pretty steady. Yeah, everything's pretty on the up and up, you know? One thing I will coach you on, so I have one right now. The listing agent had the home listed at 284. My client, and they needed 2% concessions, okay? So my client says 284, 2% concessions, and they needed 284, like no concessions. Like, that's what the seller needed. So I get a phone call saying from the listing agent going, hey, you know, because I know her personally, she goes, hey, can we bump to 286 and do the 2%? Yes,
Try.
you can, no problem. But the issue then is, when we submit the offer, you have to understand, you see addendums and counters, and so does the appraiser. So the appraiser now sees you dropped it to 284, and now you think you need your full amount, so we bumped to 286 and asked for 2% concessions. Just because you did that doesn't mean an appraiser needs to say, yeah, the value's there, right?
Yeah.
That's not going to happen. Like, he's just not going to look at you and go, hey, yeah, why not? Right?
So do you think it's better that they look at the actual contract first, or should they look at the home first and then see if the contract lines up?
They won't go look at the home without the contract.
See, but that gives a preconceived whatever.
And trust me when I tell you I know, but like, for instance, I have a big issue with VA deals, right?
Yeah.
Because VA, so good tutelage for you guys, VA automatically needs 1% concession from any selling agent, because there's what we call non-allowable fees. Okay, a veteran cannot pay X, Y, and Z. I would list those out for you, but they change, seems like weekly, so I won't do that. I'll just tell you our general rule of thumbs that I coach the agents on is 1% of the purchase contract pays for those. And it's very comfortably pays for those. It's not over the top. It's usually by $100 or so, we get a little cushion, which is good to have for multiple reasons. So a lot of times you'll see people go, I really want to lend to this VA, you know, guy at 200,000, but we don't have any room for concessions. So we'll go 203 with 2% concession. email comes over, Tidewater's enacted because the home doesn't appraise for 203 with concessions, right?
Yeah.
And the appraiser sees all of that. So now, the other piece that he looks at is how many homes in the area also have concessions, right? So if you have 5 homes or all 3 of the properties on the appraisal that he used as comps also had concessions, you'll see the 286 with 1.5% concessions go through like that.
Wow.
So
Okay.
it's very much how you structure these deals and how, sometimes it's a little bit of luck, truth be told. And sometimes it's a matter of, like, if you went to Arcadia right now and slapped a $600,000 purchase price on one and asked for 3% concessions and went over asking, you're not getting it. It's not going to happen, right? 600,000 probably in Arcadia is not even a good number to use. But my point is, it's very much precandescent on what's sold and who's used concessions in that area.
Yeah.
For instance, around the base, I get concessions almost on everything.
Yeah.
Right? It's pretty natural. It happens all the time. VA clients in and out, no issues. You go out to, say, Pebble Creek on a $400,000 house, VA, and you go 405 and ask for 2% concessions, I almost know the Tidewater's coming before I get it.
Yeah. Is it pretty standard, like anything that's over average be kind of, because it's one thing if I know I'm starting the low end comps, I'm not worried about VA, but the moment I'm at average or above, like here in Morning Glory, I was scared because I'm setting a record in the neighborhood, and if there's anything that's going to scare me, it's 100% VA appraisal.
Yeah. I mean, there's that, but there's also, like, it goes back to that, you have a fiduciary responsibility to do your absolute best by your client, right?
Yeah.
So if you're doing your job and you're doing it well, and the market's pushing it, like the appraiser has to stamp it, right?
Yeah.
So if you get it, you get it. That's kind of how I view it. But I think the only thing, if you wanted my personal opinion from a lending standpoint, I would just probably coach them on that other side of it, like, hey, this might not come in. And if it doesn't come in, let's have that conversation now, because if it doesn't come in, what are we going to do?
Yeah.
And see, it makes you wonder, especially like, because I live in Black Canyon City, and being in the rural area,
Yep.
it's can be kind of iffy. But again,
Every
if I
appraiser.
think I've done my homework,
Yep.
and that I think, to my knowledge, I have this home set at a good price.
Yeah,
We'll find out.
and I think if you're, you're reasonable, like I'll tell you a couple tricks of the trade I use.
Yeah.
When I submit the one I recently submitted, that 286 with 1.5% concession, police officer, and I said, gentleman looking to move his family out of Metro Phoenix into a much safer unit, police officer, community guy, trying to make this happen, put that in the notes, and all I can do is cross my fingers. Now, I've seen more of those.
Appraisers have hearts too?
I've seen more, think about it like this, right? If you're an appraiser, you're risking your license, right? And I've seen, and again, I have a couple appraiser friends, and they always laugh because one of them's on my panel, and he goes, when I see that come over, I know what you're doing, right? And I'm like, that's okay, I'm still doing it for the right reason, right? I'm stuffing a very qualified human in that home that I know is gonna have a job, and you probably don't have a very high risk as an appraiser, right? And my number's not that far off, right? It's 1.5% concession. So stuff like that, little tricks that I put in, right? That I'll be like, hey,
Picture of the family holding a dog.
yeah. I tell you, worried, like, because they also want to know, sometimes they don't know who they're qualifying, right? They could be qualifying, an investor, a hedge fund guy. They could be they don't know who they're qualifying. So a lot of times if it's like a community, I'll be like, nurse, first time home buyer, single mom, smiley face, right? I can never communicate with them, but there's definitely tricks that I use. To once they're tight, I have one today that I submitted for a VA, and a refinance. 62-year-old woman that's getting ready to retire and has an $80,000 balloon loan. Coming due in 5 years. And I put 3 years away from retirement, wants to stay in the home, balloon payment of 80 grand due in X, Y, and I put the date in there. And I know that's going to come in. I'm extremely confident that that's going to come in. She's been in the house 9 years. She's been in a bad loan for 9 years.
That's amazing.
Wow.
Good for her for keeping it at least.
That would scare me to death.
I mean, it is scary. I mean, she came to me, it was actually through a softball buddy, and she came to me all panicked. She's like, am I going to lose my house? I'm like, no, all right, she'll be fine. I pulled an AVM on it. I went and did an AVM, and it's within $5 grand. So I'm hoping my little trick works. But all that stuff matters, right? You know.
Sure it is.
So to answer your question, yes, lenders order the appraisal outside that window. Do I advise it? I do not. Lots of reasons. I did it one time in the past 3 years, and the deal fell out. And I was like, tush, tush, tush.
Yeah.
And it's the worst, right? Then everybody's like, well, I already paid the $500, am I getting that back? And then we have that uncomfortable conversation,
Exactly.
and then the agent's like, you referred me Kevin, and he's not giving me my $500 back, and like, nobody cares, all they want is their money back. So there's just a lot of reasons to do it the right way.
Yeah, because they only pay if it does appraise.
That's very correct.
Yeah.
Well, actually, on that one, you know what happened? Crazy story. They found roof issues, and we rushed the appraisal, and I think, if you want my honest opinion, after it all shook out, I think the seller agent knew there was roof issues, and he was doing something shady, and he tried pushing everything up, and he said, fine, I'll accept your offer at lower, but this is what I want, and you gotta order the appraisal within. And I accommodated like a behind the ears rookie. You know, just trying to do right by everybody because they really wanted the house.
Yeah.
And yeah. And again, I'm sitting there looking at my computer going, this is why you don't do it. This is why you stay away from it, Kev. Right? There's always that one scenario, and it pops up. So the order appraisal inspection complete. Okay. So our team sends out an email that literally says, and it's a templated email, let us know when you have the green light on the inspection so we can order the appraisal. The red, as I told you guys in the beginning, this is a very important piece. I have real estate agents that are part-time, whether they cut hair or sell Avon. I'm waiting patiently for you to call me and tell me, hey Kev, I can order the appraisal. My team is instructed again, after 48 hours, if they don't hear from the real estate agent, get Kevin involved, and then I'm usually hounding the agent to go, hey, I know you're cutting hair, but I need you to step away and let me know if I'm good to order. So that piece is very important. The second I love it even if Josh was walking to his car from the inspection, and this is just me coaching my agents, because you want docs at 5 days early, I'm your boy, I got this. I want that email from you the second you're walking away from the inspection going, Kev, clean inspection, order the appraisal, right? That window shrinks that for me, which I can shrink 2 days up here, right? Turn, make the transaction steps off.
Yeah, because I'm anxious to see what the inspections are.
That one's going to be interesting. Yeah.
So, appraisal link sent to the borrower to fill out. We do not get any of that information. They fill that all out. Once all items are received on the file, it enters processing status. Okay? So that means I have updated docs, right? I typically get like I said, my credit approval before my appraisal's even in, and that's all by design. Like, it works well for me. So at this point, all documents are updated: pay stubs, bank statements, new W-2, divorce decree, whatever it may be. I'm completely updated it. Setup goal, as you can see on my team, everything's designed for 24 to 48 hours, and that's taking a lot of coaching and tutelage, but we are to that point now where everything is like a machine, right? And it sticks out like a sore thumb. I have a report that runs every day that shows me in red if we're behind by even hours. And I know that sounds crazy, and you're probably thinking I'm completely nuts, but it works really well, right? I know when it's happening before it happens, right? If we're behind by a day, I see it in red. Then we go to processing. So basically we have this really cool girl that sits at the desk, right? We take an entire file, not a real file because we don't do this anymore, but a file goes to the processor, and it's like a complete package, right? Pay stubs, everything you can possibly think of to get through underwriting. Her expectation is 48 hours as well. So the second that hits her queue, her expectation is 48 hours to get that submitted to underwriting. So say we have a contract, I'll give you an example. Last Monday, we got a contract on Sunday night. Contract hit Monday morning. We were actually submitted to underwriting because it was an extremely clean file on Friday. So Monday we got the contract, Friday we went underwriting. We were approved in 1 week. That's 7 days.
Under the same roof with you guys?
Yes.
Okay.
That's
because that's the other
why this
big
goes so
benefit.
fast.
Okay.
Yep. So everybody's on the same. Even our underwriting is in Arizona. We're not allowed to be in the same building as them for obvious reasons, but it's all in Arizona.
There's a big difference between, for some quasi-inexperienced agents, a lot of your banks are either located like in Chicago or back east, which means in Arizona we have to have everything done by 3 p.m. because they're already done. And it just throws a real kink in everything. So if you have everything local, you actually have the full day to try to figure stuff out, and it's just way better.
It is nice.
So that's exactly it. I would highly recommend two things. You find a broker that's willing to coach you, like Josh. If it's not Josh, make sure you find one that's willing to coach you. Secondarily, make sure you're aligned with people that are local. I can't stress that enough. Like Josh just said, I hear so many war stories from lenders back east, and you know, I had one the other day. One of my agents called me and she said, "What are water heater straps?" I said,
What?
I said, water heater straps are what they ask for in California to eliminate earthquakes. We are in Arizona, so I'm guessing you're using a lender out of California. And she's like, "You knew all of that?" I go, "Yes, I do know all of that," right? So, anyways, she's like, she goes, because she's the type of agent that will literally drive to Ace Hardware, buy water heater straps. She goes, "I'm driving there now." I go, "You're not going to find them, sweetheart. If you find water heater straps, you need to call me and let me know where they are, because that will be an anomaly." So, long story short, she didn't find the water heater straps.
Wow.
Yes, but that's the crazy stuff you'll experience as an agent, and you're gonna like, "I'm driving to the house right now. I'm going to save the deal, right? My lender says I need everything, So the value of a local lender, very important. I'll give you another quick tidbit. California has mudslides, right?
Yeah.
Also,
Basements.
yes.
The other homes have basements like a
Correct.
in city.
Yes.
or something.
There's lots of, for instance, residual water. There was we get monsoons here, right?
Mm-hmm.
So a couple of the roof tiles moved. So the appraiser that commented on the roof tiles moved was with a lender that was in Chicago. Actually, it was Chicago, and he said, "I think we need a new roof. I want a roof inspector out there." I'm like, "You don't need a roof inspector. It's just a couple tiles." And the agent's like, "No, they said, trust me, you don't need. You're going to spend a lot of money to go nowhere." So then they asked the appraiser to comment on the tiles that were missing or adjusted, and if it was a full roof issue or that, and the appraiser commented back that it was only a couple tiles, and then they didn't need to do that. So just more tidbits of why you don't use lenders outside of Arizona. Okay, so this is another great piece. This is a great question. I always instruct people when you're sitting down with a lender, say a lender is pitching you on how great he is and how he's the most amazing human that's ever walked the planet. Ask him, how many underwriters do you have? And 9 out of 10 loan officers will go, "Oh, we have 50, right? The worst possible answer you ever could hear, okay? The more underwriters, the more feel-good conditions, the more different understanding of guidelines, gray areas, all that kind of stuff, okay? So when you ask your team or a lender that you come across, say you're accepting a contract from X, Y, and Z lender, say, "I'm just curious, hey, how many underwriters do you have on your team?" "I have 4. I have a VA underwriter, I have a USDA underwriter, I have an FHA underwriter, and I have a conventional underwriter." And they just rotate through.
Got everything
In their field.
That's correct. That way, I know, and this is the great part, right? When I know a conventional, for instance, you send me a conventional contract, I already know my underwriter, I know what my processor's doing, I know exactly what's going to happen on the deal before the dang thing gets even uploaded, right? Because I know who I'm getting. Where you have a lot of these lenders that are like, "Oh, I did 100 transactions and I have 17 underwriters." Less is more in this scenario, 100%. So it's a really good question to ask if you ever come across a lender.
Process of learning the business, you learn who I can depend on.
Yep.
It's like, man, he's the, this is the guy you want to go. I worked with this guy, it was all right, but I wouldn't recommend, because that went sour. But I like having maybe my few that I'm
Your go-tos.
very comfortable. Because
I
want to
do
know
that
that
with
you're
my
gonna
escrow
take-
agent.
Yeah, I want to know you're
My
going to
title
take
company.
care of it.
So I'll ask Josh this, and I would love for somebody to find it. I was scrutinized at another broker for this. Like this whole refer 3 lenders thing. I need somebody or anybody to find this for me in the rest of the guidelines, because I'm still yet to see this thing.
It's the fear of.
Okay.
It's the brokers. It's more of because I did do research on.
Thank you. I love this. This is great. So it makes me smile because I brought it up in a meeting in an old school broker in Sun City, which I probably should have picked my audience a little bit better. Truth be told, he looked at me and he was going like this And like all the agents like are looking at the broker like I thought you said. And I said, I'm again, if you guys can find it, like by all means, right? It doesn't exist. Just like you don't offer 3 title companies every single time, and you don't offer 3 inspectors every single time. The reality is it doesn't exist, right? The conversation very easily in coaching through a lot of the newer agents is I always tell them this. Kevin is my guy, he's my preferred, he's my go-to, he's your escrow insurance. But you are welcome to use anybody you want.
That's right.
I just have a rapport with him and I have faith in him that he's going to close. If he tells you you're pre-qualified, we're going to close, right? I don't have to worry about you losing your escrow money. And a lot of times when you put it in that framework, as you know, the lead usually comes over warm as can be, right? They know exactly what we're looking to do for them and then the system works much better.